Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special investing report brought to you in association with ASB. Today I want to have a look at all of these corporate bond issues that are coming out, more than a couple of billion in the last few months, and there'll be more to come. And look at what are the questions investors should be asking their financial advisors and brokers whenever they think about investing with one of these corporate bonds. Firstly, what is the credit rating? Now, a BBB- credit rating or better is generally termed investment grade. Now, anything below BBB- is seen as junk. And that's an interesting threshold to look at. So whenever you ask the question, what is the credit rating, it should really be BBB- or better. Then you should ask, how will the money be used? Will the company be using it to repay debt, which is a good thing, or will they be using it to invest in acquisitions or in business expansion? That obviously is riskier. And the most risky way to use the money is as what they call working capital. Then it's time to have a look at what's actually happening in cash flow, because sometimes that can be a hint that they're simply pouring good money after bad down a black hole of losses. Next questions to ask are, can it repay the capital when time comes to mature the bond? And can it continue to pay the interest on the bond? Because it's worth having a look at some of the what they call interest cover ratios. So how much cash flow, free cash flow, is being generated every year compared to the interest payments that it has to make, and make sure there's a good high multiple for that. Then you have to ask the key question: does the interest rate on this bond reflect the true risk involved in the bond? And how does it compare with other similar bond issues? Well, my rule of thumb, and I'm being quite conservative here, and looking at what's happening overseas with interest rates on corporate debt being quite high, I'd say you really should be receiving 4-5% above the government yield or the base of the yield curve for BBB- or better rated debt, so investment grade debt. Given the current government bond yield in New Zealand is about 4%, that would mean you should really be asking for 9% or better, which is quite a bit above the interest rates currently being offered by many of these investment grade bond issuers. Anything that's seen to be sub-investment grade or isn't rated at all, which is actually called junk, you should be receiving more than 7% above the government bond yield, or 11% in total once you take that into account. Next question to ask is, what is the fee that the broker or the advisor is receiving? They should really tell you that up front. Then there's the question, what is the ranking? So what happens if, God forbid, the company goes bankrupt? Where do you stand in line to be repaid when all the assets have been liquidated? Are you behind a bank? Are you behind someone else with another loan? Is the asset that is being sold, is it secured? And are you the one who's secured too? All these questions are worth asking. And then finally, is it a convertible bond? Got to be a bit careful about this. A convertible bond is one that can be turned into equity at someone's request. You've got to be careful that it's your request, and also that the dividend has some certainty about it, because sometimes convertible bonds, the dividend can be cancelled. So there we have it. 10 questions to ask when you're looking at investing in a corporate bond. I'm Bernard Hickey. That was a special investing report brought to you in association with ASB.